very, very, very long career, 35 years, I've never even seen anything remotely close to what we see happening in the gold market. And it started in November, right around Trump winning the election, where the United States, for the very first time, has become a net importer, at least that I can remember, a net importer of gold and silver. Look, the amount of gold that's coming into the country right now, Adam, is unlike anything anyone has ever seen before. We saw the largest delivery in the history of the COMEX market in February.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. Gold has experienced a major upwards repricing in recent years. It's up nearly $1,000 an ounce over the past 2 years, and in just the past year alone, it's up 35%, handily outperforming the S&P's return of just 13%. Now, some say gold is quite overbought after this big run, but others say it's just getting started and that far higher prices lie ahead due to the ongoing loss of purchasing power of the US dollars and other world fiat currencies. Well, which is more likely? For a boots on the ground report on all things gold, we welcome Andy Schectman to the program for the first time. Andy's the CEO and co-founder of Miles Franklin, a full-service precious metals broker with a mission to educate the masses on the benefits and principles of sound money and to deliver fair pricing. It's got an A+ rating from the Better Business Bureau. Now, Andy reports that amidst the current wild action in the gold market, he's seeing some developments that he's never witnessed before in his decades-long career. Andy, thanks so much for joining us today.
It's an honor to be here, Adam. Thank you for having me, sir.
Hey, it's a real pleasure. This is something that I think was way too long in coming, but I'm glad we're rectifying that, getting you on the program. There's a ton of interest in gold and precious metals right now, given how the metals have been on this big run that I just described. So we're going to talk about all of that. Real quick before I do, two announcements. One, folks, I've been mentioning for a long time that I had this old primer that I'd written on just helping folks understand the options, the different options out there for buying and storing gold and silver, everything from physical bullion that you hold in your hand that you have remotely stored, to paper gold instruments, to mining companies and the leverage that you get from that. So I finally updated that primer, and it's available to everybody for free if you just go to thoughtfulmoney.com/gold. So if you're interested in learning about the pros and cons of all that, that's where you should go. Perhaps equally, if not even more important than that, for people that have been contacting me and saying, hey, I'm kind of behind the eight ball. I'd like to start building my exposure to gold, or hey, I've got a little bit, but I really want to, start going bigger here. Where should I be looking to buy my gold or store my gold? I have spent much of the past year looking at a lot of the different solutions that are out there in the market, talking to a lot of different players, and have finally picked a player that Thoughtful Money will officially endorse, and that is Miles Franklin, Andy's firm. And near the end of this video, we'll tell folks all about everything that Andy and Miles Franklin does, why we specifically picked their firm, and of course, if you're interested in actually buying some product, how you can actually do that from them and get treated extraordinarily well. So anyways, Andy, thanks so much for A, coming on, but B, for this hopefully beautiful new partnership that we're starting.
It's a true honor. Seriously, Adam, it's a true honor. I've been following you for a long time, and I can't thank you enough for the trust, and we won't let you down. I can promise you that.
All right. Well, look, folks, I would go deeper into Andy's CV and qualifications on why he's a gold expert, but honestly, the most effective way to do that is just to let him show you. So, Andy, let's just roll up our sleeves and dive in. I asked that it's an honor to me that you watch this channel, so you're probably familiar with my opening question to most guests. I'm going to tweak it for you. What's your current assessment of the precious metals market?
My current assessment of the precious metals market is, I guess I'd say it's cloudy. And I know that, well, you'll see what I mean by that. I mean, I don't know what the end game is, Adam, but something is happening to me that seems heavily focused on American interests, but that I've never seen before in a very, very, very long career, 35 years. I've never even seen anything remotely close to what we see happening in the gold market. And it started in November, right around Trump winning the election, where the United States, for the very first time, has become a net importer, at least that I can remember, a net importer of gold and silver, not a net exporter, as it always was. There were always the newsletter writers lamenting the fact that metal was flowing eastward, probably never to come back. And all of a sudden, something changed. We've imported somewhere north of 15 million ounces of gold since, in fact, estimates have it even a little bit higher lately, as much as 20 million ounces since last year, November. And to give you an idea of just how big these imports and these deliveries are, and then where they're coming from, look, the amount of gold that's coming into the country right now, Adam, is unlike anything anyone has ever seen before. We saw the largest delivery in the history of the COMEX market in February, 59,296 contracts. That's 5,929,600 ounces stood for delivery in February, surpassing the previous largest order or delivery of 47,132 by 1.2 million ounces. This is the largest delivery ever in the history of the COMEX. And so who's got that kind of money to stand for delivery for, if you take 5,929,600, which is the number of ounces, multiply it times 2,900 plus, your calculator on your iPhone will go It's too big to even calculate it. We saw about 15 million ounces of silver stand for delivery in February as well. And JP Morgan, they used to have a gal named Blythe Masters who ran their trading desk, who always said JP doesn't buy for themselves. It's always for a customer. They delivered 4 billion in gold, billion with a B, to the COMEX in February. One of the largest shipments ever in the history of the COMEX market. What customer has $4 billion? I mean, we can guess. Is it Warren Buffett? Is it Treasury? Is it Federal Reserve? I don't know. But again, since November, roughly between 15 and 20 million ounces that we know of have come from London, just from London. And 40 million ounces of silver plus, maybe as much as 50 million, have come just from London to the COMEX. Now, the interesting thing about where this is all coming from is that London, the London LBMA market is supposedly a T+1 market, where the trade day is T+1 settlement. You're supposed to have access to your metal, in essence, in roughly 3 days. It's now turned into T+8 weeks. Now that to me is pretty much a default, and their excuse is that it is a issue of manpower and trucks. So the Bank of England evidently doesn't have enough in the way of trucks and manpower to move the gold that is supposedly available for delivery. But it's important to understand that when we talk about this game of rehypothecation of paper, where the Western system has been rehypothecating or suppressing the price of gold and silver, and we can talk or debate about what the reasons are, but they have done so using the leverage of paper contracts sold over and over and over and over and over again to the same players. That right now, as an example, there are 279 million ounces of silver stored on paper in London, but only 36 million ounces are actually available. So that means that the other 243 million ounces belong to players like the Bank of England or ETFs or whoever. They're not for sale. But this is standing against 380 million ounces in outstanding spot delivery contracts. 36 million ounces available, 380 million in paper, 10 times plus the leverage or the amount of deliverable contracts than there is gold. And so you have to wonder, is it really a T+8 week situation now because of trucks and manpower, or have they been caught with their hand in the cookie jar? They're 90% short on their ability to deliver. And in silver, Adam, it's even worse. In silver, they have a float, and we just saw actually just the other day. Let me see the number here. Just the other day, The LBMA silver stockpile suffered its largest monthly decline since records began, down 8.6% in 1 month to 270 million ounces. So they have 270 million ounces available to be delivered, yet they're trading 2.9 plus billion ounces per day. That's 3.5 times annual global mine supply per day. These are the commercial banks that forever have been able to suppress gold and silver with leveraged futures contracts, naked, not backed by the actual metal to deliver, because these banks had the ability with massive checkbooks really just to overwhelm the speculators. And what's different now, and what I'm trying to get at here, what is different above all else is that we are seeing very large interests, and largely these interests largely are believed to be sovereign wealth funds, family offices. In fact, when you take a look at the number of deliveries that are coming that are not for the banks, so the bullion banks are selling to other players. These other players are non-bullion banks. 17.5 million ounces of silver was transferred this month in New York from bullion banks to non-bullion banks, making it one of the largest transfers in COMEX history. And it's not the bullion banks. These are very sophisticated traders that are standing for delivery. And they're standing for delivery in London, and they're standing for delivery in New York. But what is really different is my entire career, no one stood for delivery. And I've been doing this 35 years. Nobody stood for delivery. What is
All
gold?
right.
I'm
I'm
sorry.
going to have to interject here just because
Please.
this is so fascinating. I just want to make sure that as much of the audience is following you. So you mentioned a number of things. I just want to clarify and
Yep.
help you clarify for the audience.
Please.
So first off, you talked about COMEX, right? So the COMEX is basically commodity exchange. That's what COMEX is a shortened form of.
Yes.
And that's basically where commodity futures trade. Um, uh, in the US, right?
Correct.
So when we talk about COMEX, that's where, gold as a commodity is priced and traded. Now, a lot of that trading happens in futures contracts, which then brings us to another thing you talked about, which is standing for delivery. So normally futures contracts will expire and the actual commodity won't move anywhere. It's just a
Correct.
paper agreement. Hey, we'll just sort of meet up at the end and pay, somebody pays the difference to the other end of the trade. But you as a party in that transaction, instead of getting money, you can say, actually, you know what? I don't want the money. I want the actual commodity itself, right? That's
Correct.
called standing for delivery. Okay. So you're saying we're seeing a lot more people now stand for delivery. In fact, I think you said the most you've ever seen in your career
And the
are now
most the
standing
COMEX
for
has
delivery.
ever seen.
The most COMEX has ever seen, right? So,
Yes.
so basically that says all of a sudden people are preferring the physical bullion than dollars in exchange for it, right?
Right.
Um, Now you talked about the LBMA. That's the London Bullion Metals Association.
Association.
Yeah.
Yep.
Okay. So that's sort of somewhat of a sister organization, but it's based in London, and that's where I guess a lot of the European and world spot price activity happens. Um, Now you said COMEX is. Especially because people are standing for delivery, they're saying, look, we need more supply. And so they're essentially getting a lot of that supply now from the LBMA. And if I heard you correctly, you said, hey, that used to be kind of a T+1 settlement process. The futures contract expired within a day, you were made whole, whether you wanted to get money or the metal. Now that's like at least 8 weeks, right?
Correct.
Because they're saying manpower and trucks. But you're saying, you then talked about something else called rehypothecation, which is that they've got metal in their vaults, but that metal might actually be promised to multiple people. It's almost kind
Correct.
of like, well, it's like a bank, really. A bank on any given day doesn't have all the cash backing all the deposits. They're betting that only a small number of their customers will ever come in and ask for dollars on any given day.
Correct.
If too many people come in, then you have a run on the bank. So you're basically saying we might be having a run on the LBMA right now, correct?
That's exactly right. 1,000%.
Okay, great. So I just wanted everybody to sort of get caught up as to what's going on here, but it basically sounds like the world is perhaps in the process of making a run on let's say the commodities exchanges. Now, you also talked about a couple of things. You said, all right, look, this volume is really big. It's too big. It's happening in too big blocks just to be regular people with their onesies and twosies. This is like governments,
Correct.
billionaires, right? The very rich. So,
Correct.
so something big is afoot is what we can take from all this. You mentioned one more thing I just want you to clarify for folks. So you said, yeah, that the people who are standing for delivery it's not just the bullion banks. We're seeing these non-bullion banks, these governments, these billionaires, et cetera, going on. What is a bullion bank?
Bullion bank would be like JP Morgan, Citibank, Deutsche Bank, the large commercial banks who are the ones that are the largest traders in on the COMEX market and on the LBMA. They're the market makers in essence. They're the big players. And yeah, what we see happening, that move from the bullion banks to this other group of traders, largely that are opaque, believed to be sovereign wealth funds, I think really begs the question, why are nation states and why are maybe central banks acting on behalf of, or proxies acting on behalf of a central bank or these sovereign wealth funds? Why are they standing for delivery? This surge in delivery, which we call open interest, it surged over 750%. And why are they all standing for delivery? Originally, Adam, a lot of the thought of this was Trump tariffs, but this is much bigger than Trump tariffs, as far as I'm concerned. And I think it begs a question, but maybe it's even better to lay a baseline, and that baseline is, what is gold? Gold was reclassified by the most powerful bank in the world, the Bank of International Settlements, in 2019 as the world's only other tier one reserve asset alongside US dollars and treasuries. So since the end of World War II, there's been one tier one reserve asset, US treasuries and dollars by extension, and now it's gold. And if we look at what's happened really largely since 2017, we've seen a massive accumulation of gold by the world's central banks. But there's also been um, a very stealth phenomenon going on where repatriation has been happening at the highest level, where central banks, 40 of them, have repatriated their gold from the Bank of England and the New York Fed. Now, why would they have left all of their gold at the Bank of England and the New York Fed? Well, first of all, you have Western jurisdiction and Western rule of law. The Bank of England would hold the gold for traders that want to have access to the LBMA, which is a 140-year-old exchange, the oldest gold exchange in the world, that does the majority of the physical settlement. So the COMEX sets the price. London typically is one of the big delivery hubs where people can actually take physical metal. But largely, no one ever really stood for delivery. And to give people an understanding of COMEX, we use it as a gold company. If I have 5,000 ounces of gold in my warehouse, I will sell 5,000 ounces of gold on COMEX. So as the price of gold goes up in my warehouse, it goes down on what I sold short on COMEX and vice versa. It allows me to be market neutral. I'm not going to stand for delivery, and my position is covered. It's not naked. Most of these positions in London and in the New York COMEX are naked. And all of these governments now realize this, and they're standing for delivery. Bank of India, as an example, not only bought more gold over the last 2 years than they have in years and years and years, but they're repatriating all of the gold, taking possession of what they're buying and repatriating it all. As an example, Bank of India brought home 100 metric tons from the Bank of England that they've had stored there since 1991. I'll give you just a brief Google search. We'll pull up a litany of countries that have brought their gold home from, I'll read it to you here real quick, that have brought their gold home from the New York Fed just recently. Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia. The list goes on and on. This speaks of no longer trusting the system, bringing back what? The only other tier one reserve asset in the world. And they're taking physical possession of it. And that's really one of the most important things to understand, that they don't trust the West anymore. And they're doing it in a very slow, methodical fashion. But it seems all of a sudden things have got much more pitch, if you want, fever pace, if you want, accelerating what has been happening slowly for years. And
okay, and sorry to interrupt, but how much of that fever pitch do you think is due to Trump tariffs? Because the logic there is, look, if I'm gonna continue to request that gold in the future, it's gonna start getting slapped with a tariff. So let me get a lot of it today before the tariffs go into effect. So you can explain away some of the scramble. Is it 50% of the scramble? 85%? 10%? What do you think?
I guess I'm more cynical. I don't think it's much at all. There's other logic says the Basel III regulations. That's the regulation that reclassified gold as tier one, but it's also the regulation that makes banks get their balance sheet in line, and gold that is on paper is not considered tier one. It has to be physical gold in your possession. That goes into effect July 1st to the US for the banks. Some people say it's that, getting physical gold in place for Basel III. I don't really think it's that also. I'll give you just a kind of a neat angle to think about. I did an interview with Judy Shelton, and I asked her, Judy, well, first of all, Judy's premise, and she was Trump's nominee to run the Federal Reserve in 2016. She just wrote a book called "As Good as Gold." It's fantastic. I suggest people read it.
Sorry to interrupt, but just so you know, I just released an interview with Judy about an hour before we hopped on here.
Oh,
So
gosh.
my audience will hopefully have just watched that right before this video.
Well, as a little primer then, or post primer, yeah, her whole idea is to issue treasuries backed by gold, because who wants to buy treasuries when you look at last year as an example? Last year, gold was up 40%, and the treasury was up 4.5% in the 10-year. But gold has no counterparty risk. It can't be sanctioned. It can't be inflated away. It doesn't have default risk. And so for years now, in fact, net since 2014, central banks have been dumping treasuries, haven't been buying any new treasuries, net. Since 2014, they've sold 700 billion in treasuries and bought at least that much, if not much more, in gold, because there's always this, it's somewhat opaque how much they're actually buying and how much they're actually reporting to the IMF as they're supposed to. But things are going on all around the world that suggest they're doing all they can to not. In fact, Saudi Arabia and China have both been caught by the import-export numbers coming out of London and Switzerland, not reporting to the IMF. Sorry. And China's going around buying doré and concentrate right from the miners. Doré are the crudely refined bars the miners pull out of the ground and crudely refine them and send them for full refining later, or concentrate is like a sludge byproduct. They're buying it, paying twice what the West will, sending it back to China and refining it, disintermediating the marketplace. They're already the second largest producer of silver in the world and the largest of gold. So it's very opaque how much is actually being produced and actually being accumulated. But we are heading into a place where gold and silver are taking on a whole new vision. And Judy's idea is that, look, you want to inspire confidence in our treasury market. When people really don't want to hold our treasuries, you have to do something drastic. And her idea is to back 50-year treasuries, starting with 50-year treasuries, and then perhaps later on going and doing smaller duration, but 50-year treasuries backed and redeemable in gold. And so I said to her, I said, Judy, first of all, why hasn't Fort Knox been audited? And this was a month and a half ago when I did the interview. And she said, this is before the talk of Elon Musk doing it. Well, we should have done it. The excuses are horrible. She says they say that it's too expensive, logistically challenging. She says, we're the United States, for goodness sake. We ought to do this. But interestingly enough, there's another little tidbit to this. And I said, Judy, do you know that gold is held in a balance sheet, a classification on every central bank balance sheet in the West? It's held in something called the gold revaluation account. And I said, do you think it's possible gold will be revaluated? And she kind of hemmed and hawed, and not directly, but somewhat indirectly suggested that they would. Now, it's not a radical thing to say that, as you have the head of the Dutch National Bank screaming, we need to revalue gold in our balance sheet, or that's held on our balance sheet to offset our liabilities. Members of the German Bundesbank, we need to revalue gold to offset our liabilities on our balance sheet. It's valued at $35 an ounce across the Western world. It's valued at 42.22 in the United States because when Nixon closed the gold window in 71, he then revalued gold from 35 to 38 in 72 and from 38 to 42.22 in 73, where it stayed on the United States government balance sheet ever since, valued at 42.22. Just marking it to market would substantially help a balance sheet that is, you could say, in default. Now, I don't think people understand how big the balance sheet problems are. I mean, 1 trillion seconds ago was 31,688 years ago, worth 36 trillion in debt on top of 170 trillion in unfunded liabilities. You could argue the game is over. So how do you get people to want to take our debt of a country that is continuing to inflate and continuing to throw on debt? And even if Elon Musk and Doge is successful in knocking off $1 trillion, that still leaves $1 trillion+ deficit each year. The debt is growing too fast, and the demand for our debt is waning in favor of the only other tier one asset next to our debt, gold, which has doubled the performance of the 10-year Treasury since 2000, has no counterparty risk, and no sanction risk. And so I think the possibility that I'm getting at, you even had Cynthia Loomis, and she's kind of going back and forth on all this. She's a senator in Wyoming who came out and said we should revalue gold, held in the gold revaluation account, in order to fund the strategic Bitcoin account. You got guys like James Rickards. I know Jim, and he's saying gold could go to 24,000 an ounce, and every $4,000 increase in the price of gold would add 1 trillion free and clear to the Treasury general account. He gets that number by assuming a 40% gold backing and dividing it into M1. Now, is that crazy? I don't know. How crazy is Bitcoin at 100,000? Could they do it? Absolutely. The Treasury could say any central bank that would like to deliver gold to the Treasury will be paid 24,000 an ounce. And just like that, in fact, Trump wouldn't even need much in the way of congressional approval. He would just tell his Treasury Secretary, Scott Bessent, who, when he was a hedge fund advisor, that was his largest holding, gold. He gets it, to tell Jerome Powell, please revalue gold to this number. And it would be. And then all of a sudden you have options that perhaps you don't have when you are knocking on the door of 225% debt to GDP, which doesn't even take into account the unfunded liabilities. When you look at all of the things that Trump has done since he's come in, and God bless him for doing these things, we needed them. Many of these things we needed. We'd gone off the tracks culturally, but a lot of them have been kind of shock and awe. And I think that there is a possibility. Now, that's why at the beginning I said, I don't know what the plan is, other than the fact that it seems American-centric to see massive deliveries of gold and silver coming in. Massive, it looks like a run on silver now also at the LBMA. All of this coming in, never happening before, at a time when I think there's a realization that we're in trouble in terms of our debt market. Who is going to continue to fund our deficit spending? And the only way to inspire confidence, like Judy says, is to back it by gold. Well, do we need more gold and silver here? Are they reshoring it? Could it be Trump tariffs? Could it be Basel III? Or could it be something much bigger? Part of me feels that it's just too obvious. In fact, part of me feels that was the ruse to get them to send it back. And the way they do it, by the way, Adam, the COMEX contracts are very fungible. They can take that COMEX contract, and they have a deal with the LBMA where it's called exchange for physical. I'm going to send you my contract. You can liquidate and get the cash. You send me the metal. These EFPs, as they're called, have been wicked, going back and forth. Give us the metal, give us the metal, give us the metal. And then it became obvious, this isn't just Trump tariffs, because this is something much more. And I will tell you, it's an existential threat to some of these banks in the West who are massively naked short in an environment where all of a sudden, yeah, you know what? I think we'll stand for delivery after all. I don't think I want paper promises anymore. And that's like Bernie Madoff. He ran a great shop until everyone said, I'd like some money back, please. And then things got real. So I'll let your viewers decide what the reality is here. But And then, of course, you get Scott Bessent saying we're going to remonetize the balance sheet. Look at the
Well,
United
yeah.
States government balance sheet, and you don't find much in the way to remonetize. Gold is staring at you, held in the gold revaluation account. So something bigger than I think we're being led to believe is what I think is happening in the gold market.
Okay, so again, super fascinating. So let's plan this out, or war game this out a little bit. So for whatever reason, or really many of the reasons you've mentioned, we have had governments, central banks, wake up and say, you know what, gold's more important to us. We got to start buying more, and we got to start repatriating it, right? And what's funny about this is the watch what they do, not what they say, right? And it wasn't all that
Right.
long ago where Bernanke was saying, "Oh, it's a barbarous relic," right? It's just this vestigial legacy of the past. I don't know why we hold it, right? Um, Clearly, we've seen historic buying from central banks in recent years, picking up for the reasons you mentioned. Uh, we have also, as you described earlier, we'd seen the Eastern buyer wake up to gold. And so we've been having this flow of bullion from west to east. They've been probably laughing, all along the way. Oh my goodness, I can't look at how cheaply they're willing to sell us all this.
Right.
But we now see the West, at least Western countries, say, actually, this is kind of important for us, right? So there's now talk in the US of auditing Fort Knox and potentially revaluing our business, our balance sheet nationally, and maybe creating a sovereign wealth fund. And gold obviously is a big part of all those discussions. Um, Well, let me ask you this. So do you presume, two questions for you to answer. Do you presume that the next shoe to drop here is the Western investor to wake up and say, hey, wait a minute, there's really something going on here. I need to have some gold. And if you look at gold's percentage of the average portfolio, I think it's still less than 1%, where, Rick Rule likes to talk about historically. I think it used to be a
Yep.
little more like 4% or something like that, right? So even just getting back to historic means would be like a 4x increase in demand. So A, do you think that that is a likely next shoe to drop here? And then two, what then happens if, not saying it's going to happen, what then happens if your rehypothecation concern really comes into play, where people begin realizing, hey, you know what, for the demand that's rising here, there's just not enough bullion to meet it.
Yeah, and I'd add silver to it as well because, and I agree with that, because 70 million ounces of silver were drained from the LBMA in January. It's an all-time high monthly record. 20% of the float gone. And then here in February, another 8.6 million ounces out. So we're seeing tremendous amount of gold and silver being delivered away. And I think it is an existential threat to these banks. But when you realize that the public is being misdirected, the public has been misdirected into a risk-on trade, at the worst possible time. In fact, right now, hedge fund exposure to the Mag 7 is down to a 22-month low. So the big money is moving in a different direction. They're all of a sudden kind of sliding to the risk off category when everyone's been talking risk on. You have 6-to-1 insider selling versus buying. You have the Atlanta Fed now revising their GDP numbers down to negative 2.8 from 4% for the year. That's what they think we're heading into. So at the same time, the public is going all in on Bitcoin, on Nvidia, on Apple. You have the smartest money in the world. And let me make something very clear. It would be far easier for someone to write me a check for $50 million to buy gold and silver than it would be to stand for delivery on COMEX or the LBMA. You are talking highly sophisticated traders. And I think the common denominator in highly sophisticated and very wealthy is they know the information. Who are the sovereign wealth funds? Is it the central banks wearing a different hat, or the commercial banks wearing a different hat, or the very, very, very connected wealthy elite taking $4 billion in delivery onto COMEX from JP Morgan, who only does it on behalf of customers? So my point is that I don't care what market you pick, the insiders always move before the public. Is it ironic that the insiders are selling 6-to-1 and the hedge funds have their lowest exposure to the Mag 7 since for 22 months, at the same time the public's moving in that direction? Or how about what has the public been jumping into for the past 2 years as the central banks net have been selling? Oh yeah, that's U.S. Treasuries. 7 trillion record in money markets, all invested in Treasuries. All of the people chasing yield in Treasuries, and one half, to Rick's point, of 1% allocation into gold and silver, while the most well-funded and, more importantly, well-informed traders in the globe are not only copiously accumulating gold and silver. The point I'm trying to get across is the repatriation, the taking possession of, removing counterparty liability. And in a world that is so systemically interconnected, incestuously so, um, that's a problem when dominoes start to fall. To your point, what could happen? Well, these bullion banks aren't just bullion banks. They're the biggest banks in the world. And these are very, very large Western money centers. You could say it's Deutsche Bank, UBS, Standard Charter, at the big European banks, or you could say it's Bank of America. Is there any coincidence that Warren Buffett's been dumping all his Bank of America? And Ted Butler, a fantastic gold and silver analyst of the COMEX, who passed away, God rest his soul, before he died 6 months ago, was screaming that it's Bank of America who has 1 billion ounces short on paper in silver and 30 to 40 million ounces short on gold. Now, I could go into a long discussion why I believe silver has been manipulated. And I would say gold has been manipulated for a very long time for something called Gibson's paradox. It's the inverse relationship between real interest rates and gold. And forever, they suppressed gold because they maintained a situation of an illusion of wealth in a low interest rate environment where people's stock portfolios and their homes and 401ks all went up in value because rates were suppressed. It created distortions in asset prices and misallocations of capital and resources. Well, if you do that, you have to step on gold, because if gold doesn't pay a coupon or no return, well, low interest rates, Gibson's paradox would say, well, gold should be going much higher. But if you have very high interest rates, well, Gibson's paradox would say, well, you can buy treasuries with safety. The only difference this time is, who wants to buy treasuries from the nation who's the most largely indebted nation on the planet? They've gone too far, and they suppressed interest rates for too long and created these distortions. And now the world is saying, I don't have an appetite for your debt, when a country that invaded Iraq 20 years ago is still occupying their country, went there under, false pretenses, looking for weapons that were never there, but they're still there, sanctioning half of their banks, still for trading with Iranian banks to buy liquid natural gas, holding all of they made $90 billion in revenue in 2023 from selling oil. It's at the New York Fed. At the end of the year, they asked the Biden administration for $1 billion. We said no. We'll give it to you next year. And this is their money. So they're kicking Western coalition forces out. They're making trading in dollars illegal. There are no more green bills in any bank in Iraq. They got them all out. No dollars at all, because they look at us as not being good stewards, let's say, not being fair. Well, from a world perception, if that's how we operate, well, why is it our prerogative to say what Russia did is wrong? I'm not making a comment on any of this. I'm just saying this is how the rest of the world looks at it. Well, they can do that, go there and say, well, sorry, we didn't find the weapons. We destroyed your country, toppled your regime. We're still here 20 years later, but you can't do this. So we're going to confiscate your $5 billion in U.S. treasuries and give it in the form of weapons to the Ukraine, the country you're in a war against. That's a line you really don't come back from. And so these countries are all saying, you know what? If they'll do it to them, they'll do it to us. We don't want gold or treasuries anymore. We want gold, which is the only other tier one asset, and it has no counterparty risk. And maybe this new administration is wise enough to understand that and said, we have one chance to get all of this gold and silver back, or it will flow eastward and never come back. Because I've been screaming, Adam, for the last 4 or 5 years that these countries have become coordinated, motivated, sophisticated, wealthy, and understand what we're doing. I'll highlight it this way. The BRICS grain exchange, which is under development, the gentleman who's running it or is behind it says, We consume more wheat and produce more wheat than the West does, but we can't control the prices. It's controlled largely on COMEX. But with the development of the grain exchange, this will change. Well, they know exactly what we're doing with the world's precious metals and other commodities as well. And so they're using it against us and have for 4 years by also suppressing the paper price and standing for delivery off of COMEX and the LBMA. And the delivery over the last 4 years has slowly been increasing. Little by little, they've been draining the world's exchanges, using that against us. And I believe the Trump administration, if I had to guess, says this can't go on anymore. So we're going to threaten tariffs. We're going to get all this back on exchange for physical. We're going to become a net importer on gold and suck all of it back as fast as we can. I think the Bank of England said, oh, wait a second, you guys, this isn't just EFP. This isn't just Trump tariffs. We got to put the brakes on and figure this out, or we will blow up some of the biggest banks in the world because they are naked short 90%. And when no one stands for delivery, that's a hell of a game. You make a lot of money with no risk until the countries that are sophisticated, motivated, coordinated, and wealthy say, we notice a loophole. We see what you're doing. We'll stand for delivery. Your Western facade of suppressing the metals to support the bond market in the West and the illusion of strong dollar, strong pound, strong Swiss franc, strong euro, that's BS. And so now I think Trump came in and said, and Bissett and his advisor said, we got to get this stuff reshored now. Now, is there something bigger in store for it? I believe there is. I truly believe that the Bank of International Settlements, which is the most powerful bank on the planet, the most well-informed and sophisticated bank, does not reclassify gold as the only other tier one asset in the world if it was not intended for something. And then you see the massive repatriation by 40 or 50 of the world's central banks. And then you see draining of the exchanges. And then you see standing for delivery. And now we're this close to watching the LBMA blow up. And if it blows up, that simply means that the banks who have been suppressing the price forever have been called on the carpet, and a failure to deliver would become systemic. And it's not just in precious metals, because these banks are the biggest banks in the world. Yeah, they're bullion banks, but they're the banks we know as the commercial banks. And could it be something bigger? It just doesn't seem like tariffs to me. It really doesn't.
Okay, so you've delivered in spades, Andy, on me saying I was just going to let you prove on your own how well you understand the plumbing of the whole precious metals system. Like I said, phenomenal job on that. So we've got a lot going on here. Obviously, a lot of things that you said are unprecedented in your multi-decade career in this space, and very big games afoot here. Now, we could have had a whole discussion just on the arc of fiat currencies to continue to lose purchasing power as time goes on. And in a post-COVID world, we've already seen how when governments really want to step in and stimulate, that we can see a large percentage of our purchasing power vaporize pretty quickly. I think looking at trueflation at least, we're getting close to like 30% decrease in purchasing power versus January of 2020 pre-COVID. We had just that alone is a good reason to be considering buying precious metals. Now, of course, we have this much grander potential arc that you're talking about too. So lots and lots of reasons why people should be considering owning some of this stuff. I'm not going to ask you for price forecasts or all that stuff, but I assume you think that prices are headed higher from here, potentially way higher if something like a default of the LBMA or the COMEX happen. Yeah, you're nodding as I'm saying this. So let's transition now to the actual. Okay, well, I'm a regular person and I want to get some exposure or increase my exposure to gold and silver. Obviously, they can do that on a price basis by buying these ETFs that are out there. And yes, some of those ETFs purport to be fully backed by bullion. A lot of them trade gold futures, and therefore you've got the counterparty risk there. But if you want to go the way of countries, right, and have bullion that you control, physical bullion that you can get access to whenever you need to, then obviously buying them from an organization like yours is a good way to do that. I mentioned earlier that we've just signed an agreement where Miles Franklin is now the endorsed precious metals partner for Thoughtful Money. So if somebody's watching this Andy, and says, "Okay, yeah, let me go talk to the guys at Miles Franklin." What does that look like? What should they do? What's that experience like?
I'm going to answer that question, but you kind of opened the door. You got to give me 1 minute to mention one other thing.
Go for it.
The ETFs, GLD and SLV in particular, with all of the things that are going on, JP Morgan being in the center of repatriating and delivering and buying, it always bothered me that 3, 4 years ago, JP Morgan, I was giving speeches at Doug Casey's and the Sprott and the Agora conventions, and I would say markets are manipulated, and I could show proof of it. Um, and I was right. And I once gotten a little bit of a tiff with Doug Casey about this. He said the JP Morgan traders could never keep their mouth shut. And then 2 years later, they pay the largest fine the Justice Department has ever handed out, ever, $920 million to JP Morgan for manipulating the gold market.
For
Their head
manipulating the
trader,
price,
Michael
yeah.
Nowak, is still in jail, yet they're still allowed to be the custodian of the world's largest silver trust. Now, I find it interesting that HSBC, that's SLB, by the way, HSBC Bank has always been the prime custodian of GLD. And SLB is one of the largest stockpiles of silver in the world. GLD, fourth, fifth, sixth largest stockpile of gold in the world, including central bank holdings. And guess who just took over for HSBC Bank as the prime custodian of GLD? You guessed it. It's JP Morgan and BlackRock. They both own or are in custody of SLV and GLD. You read that prospectus, you'll never want to own it ever. In fact, you would dump it. You read pages 6 through 12, I think it's risk factors. You'll sell it immediately. And what's kind of interesting about that, I'll give you the actual numbers because I think it's really quite illuminating that we've seen come out of GLD. Now, the prospectus says you and I can't take possession of the metal. We can't. The large bullion banks like JP Morgan, who fund what's called baskets, can, but none of us can. People have said to me, do you think gold and silver will be confiscated? Like Roosevelt did over my shoulder. No, I don't, I would say. I've been saying it for years. It'll be the ETFs, if anything, because they could take it all and look you in the face and the world in the face and say, what? We didn't break any laws or infringe any civil liberties. You all can't take possession of the metal. It's just a price representation. In fact, you can still buy physical metal, but here's the interesting thing. As the price has gone parabolic in gold recently, gone up and up and up and up and up, we have seen a total of 16 tons of gold leave GLD. Now, the talking heads say, well, that's strong interest rates, a rising dollar, profit taking, the Trump risk on trade. No, it's not. It's what's called share redemption. And these big bullion banks quietly, in a very opaque manner, don't tell, they redeem their shares and they're pulling the metal out and getting physical possession of it alongside of all of these developments we're seeing on COMEX. It is something far more substantial than we are being led to believe. So yes, physical gold and silver to me, and I want to make it very clear, Adam, is not an investment to me. It is wealth, period. It's been wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, and is still wealth. When I started my company 35 years ago, I was 19, and my dad said, we started in an office the size of a closet before the internet. And he said, I'm not going to let you make the same mistakes I did as a younger man. We borrowed $60,000 from his best friend, whose middle name is Franklin. My dad's middle name is Miles, on a wing and a prayer to start a company selling precious metals and Swiss investments. Somehow, here we are 35 years later, but he said, you'll buy something every 2 weeks. I don't care if it's 1 ounce of silver, period, or I'll fire you. Okay, Dad, if that's the only rule, I can do that. I've honored my promise to him, and for 35 years, I have never missed a 2-week period, ever. And it's the best gift he ever gave me, ever. And I make every one of my employees who I say, you're going to take this job, here's what you're going to do. And they all thank me, because you begin to understand the laws of compounding working in your favor instead of against you, and wealth accumulation, paying yourself first. So when you talk to anyone at my company, myself included, precious metals are not something you buy to get wealthy. It is wealth. And if you own enough of it, perhaps you will be wealthy. We make it very easy. Therefore, we want things to be very vanilla. American Eagles, coins made by the U.S. Mint. We're one of only 27 companies ever approved by the U.S. Mint as an authorized reseller of their product. Canadian Maple Leafs, 1 ounce gold bars, anything that's going to be very conservative. Um, Austrian Philharmonics, Silver Kangaroos from Australia. We will never recommend anything that is esoteric, that is wickedly expensive, collectible. We have access to it if you want it, but our prime focus is getting you the most gold and silver for the least amount of premium, but giving you the highest degree of liquidity. And oftentimes you'll see a mistake made in this industry. Growing up when I did and when you did, you remember the local hardware stores and the local bakery, and everyone knew your name was different. And now people go to the big box stores and expect to maximize the amount of volume you can get for your dollar. And in some respects, maybe that there is a time for that. But when you're accumulating gold and silver, to me, you don't want to be penny wise and pound foolish. I focus on 1 ounce, primarily on gold, and never bigger than 100 ounce in silver. If I had my druthers, I'd do 1 ounce for everything. Because whether you're playing poker with your buddies or driving on a really crowded interstate or investing or living life, you can never have too many exits or outs or options. And oftentimes in this industry, large blocks, the savings is not commensurate with the loss of demand or flexibility. So in my mind, when someone calls us, what we will do, we'll ask them a few questions. If they want to go down this road, we'll ask a few questions. What are you trying to achieve? And then we will provide a solution that is wholly liquid, non-subjective, conservative, and very price competitive, as competitive as anyone in North America. But always trying to maximize liquidity and flexibility, thinking of the end game. Oftentimes people will maximize on the in and not think of the detriment on the way out. What's the liquidity? What's the demand? And I think you're far better off having smaller units at a very, very small markup. And that markup is not dealer markup. That's the cost that the mints charge to sell the smaller pieces. And it's very, very small. It's minuscule. But that's really our focus, getting you the most amount of gold and silver with the least amount of aggravation, the least amount of premium, and the greatest amount of utility and flexibility and liquidity.
So if I can just add on to that, that was great. There are many reasons why Miles Franklin ended up winning the selection process. And one was brand and trustworthiness, right? You've been in business for 35 years. You've got a brand to protect. You built that brand over time. You've got the A+ Better Business Bureau ranking. You've got, I think, no negative reviews, at least that I could find on your company. Lots of good testimonials. So you have got that brand and trust factor. Then you've got the really what do you want to call it? Lowest pricing, relative to the other players out in the space. And again, I don't know if there's a price guarantee or anything like that, but I don't know if you beat them every time, but every comparison I did, you guys were the lowest or tied for the lowest. But then the third is this sort of personal touch, which you really do. I mean, I have that with a personal little shop, in my neighborhood, and it's important, I think, to have a relationship with your gold provider. And there were lots of big brands that I talked to where they are a big box. Nobody's going to get any sort of personalized attention. Yours seems like a very white glove touch where, people call in, they have a conversation with you or one of your lieutenants, a live person, and say, look, what are you trying to do? What are your goals? Okay, let's put together a plan that's custom fit for your needs. You're nodding as I'm saying all this, but I just wanted to really let folks know that there's an awful lot of what went into that selection process and why you guys rose to the top as the cream of the crop.
I appreciate that. There's one other point that's very important to make. I live in Delray Beach, Florida. 15 years ago, my oldest friend in the world, and that's one thing, just about everyone works for my company, I go back to childhood with, who all had very impressive resumes before coming to work with me. Wall Street, private equity, owning and selling businesses, degrees from Wharton or masters in business administration from Temple. I go on, but they're all very sophisticated. But I moved, my oldest friend in the world since second grade, opened up a satellite office for us in Delray Beach, Florida, where we've had it for 15 years. I moved here in the middle of the George Floyd riots for personal reasons, leaving Minneapolis, a place I never thought I'd leave. I loved it there. I still do, but Florida is where I now live. But I left my corporate office in Minneapolis for one reason in particular. This is a federally non-regulated industry. And so Minnesota has been the only state in America to regulate what is a federally non-regulated industry. And we've always been beholden to the Commissioner of Commerce with a surety bond, background checks of all our employees, and continuing education and licensing compliance that no one else in America has to abide by. Now, the state of Minnesota is retooling this a little bit right now. So they've put the licensing temporarily on hold. We've been licensed and bonded now for a decade, roughly. One of the only companies in America that has. We still employ our surety bond. We keep it active. I don't know of another metals company that has these regulations. For the last decade, most of the companies in the industry wouldn't even touch Minnesota clients because they too would need to be subservient to the commissioner of the Department of Commerce. So in an industry where the product is homogenous, it's like a McDonald's hamburger in Des Moines, Iowa versus Delray Beach should be the same. Uh, when you're dealing with a product like gold and silver, it's the company and the reputation that stand behind it. We're very proud of it, never having a complaint, and A plus, our licensing, U.S. Mint accreditation, and relationships with people like you and Rick Rule and all the folks that we have had the good fortune of partnering with, which mean an awful lot to us. That is what differentiates us in a very, very big way. But yeah, the white glove service is also something, and don't think people understand how important a relationship is until you need one, until there's a problem or an emergency or something that is accelerating your need to get something accomplished. And all my brokers provide their cell phone numbers. They're available all the time, yet we do not call and bother people. And that's why we've never had a complaint in 35 years and approaching 11 or 12, I don't know, it's 12 billion in sales since 1989. And I take that really very seriously. So yeah, I think, look, you can call in and ask basic questions, how to, what not to do. You can ask questions on anything you've heard on this interview. And every one of my brokers would be able to expand upon it and articulate on it. You could just ask for the price list. So there is hand holding if you want it. There is relationship building if you desire it. That's what we're strong at. Or if you just want to get a price list in place in order, we can do that too. But we have found that it's a very comforting model for a lot of people because, I don't know about you, I wouldn't feel comfortable spending six figures online and assuming it goes well. And I'm sure it does most of the time, almost all the time with the very competitive, successful online companies. And JM Bullion, APMEX, SD Bullion, these are money metals. They're all great companies. We do things a little bit differently, and we found great success in that. So you can take that relationship as far as you want or as minimalistic as you want. But I think there will come a time when perhaps relationships are valued far more than not in a world that seems to be moving at an accelerated pace. So to whatever degree your viewers would like to exploit that opportunity, it's up to them. But we're pretty good at it and making sure that we put our clients' interests first and foremost above all else.
All right. And let me ask this. So obviously folks can reach out to you guys and say, hey, look, I want to buy X and have you ship it to me. But as I tell people, beyond a certain amount, you don't want to be amassing this massive pile of bullion, at your house, right? Above a certain amount, it becomes a theft risk, it becomes a loss risk. But a lot of people still want to keep accumulating bullion. So the question is, oh, where do I do that? And that's where storage comes into play. You guys offer storage solutions too, right? So people can continue to own bullion, in their name, perhaps even have it stored, in safe deposit boxes that only they have the keys to. So just talk for a quick second about your storage solutions.
Yeah, I think we're the envy of the storage industry, and I mean that sincerely. We have exclusives from Brinks that they've never handed out to anyone. We have relationships with Brinks, Dallas, Texas. To my knowledge, we're the only ones there. We have Salt Lake City, Utah, Miami, Florida. We're the only ones. It's Doral. We're the only ones there period. The only company in North America that has storage capability in Florida. We have Brinks JFK Airport. We have Montreal, Toronto, and Vancouver. We also have the only fixed rate storage program for gold that I think they have ever handed out, where it's based on the number of ounces that you store rather than the appreciating volume or percentage of asset value, as it's called. Everyone else uses percentage of asset value. And they use that because as the value of what you're insuring goes up, well, so too does the cost. Well, we worked out a deal with Brinks where that doesn't happen. And I think we're probably by far the most competitive with gold. With silver, typically, at least until we get above $40, we tell people to do the variable rate. Once it gets above 40, in many of our facilities, we can fix it, and no one really can touch that. We also have the only safe deposit box program, as well as you mentioned, in Toronto and in Vancouver. They are one key boxes, not the two key where you hold one and the bank holds one. They're one key. You get the only key, the only spare. If you can't get up to Toronto or Vancouver, if you can, great. You can deposit it into the box. They'll seal it. They'll give you the key back and a certificate. If you can't, we send you a FedEx air bill. You drop a key in the FedEx envelope, send it up to the vault in Toronto or Vancouver. They make additions or subtractions under camera, give you back an amended certificate, send your key back, and you're good to go. And they've never offered that to anyone. So whether it be a fixed rate, whether it be a safe deposit box program, or Miami and Dallas storage relationships, we're different than just about everyone. So I think when it comes to storage, yeah, it's for a lot of people, holding silver in particular can be a problem. You can have in the palm of your hand and a clenched fist, you could have a tube of 20 gold eagles. It's about the size of a D battery. Well, 20 gold eagles nowadays is
It's about 60 grand, a little less than 60. Yeah.
$60,000. Yeah, so 120,000 bucks in two hands, and then put two in your two front pockets, you got $250,000. Easy to store, easy to hide. $250,000 in silver, on the other hand, it's going to be roughly 250 pounds or so. So it's a much different situation. So yeah, storage is something if people are interested, and certainly we can help. And of course, IRAs, any of these things that people are interested, we can help. But we do shine as it pertains to our storage relationship with Brinks. And in roughly 17 years that I've worked with them, I've never seen anything out of place, even by 1 ounce. It's been an amazing relationship, and anyone looking for storage, certainly that's right up our alley.
All right, great. And just real clear with storage, somebody can say, look, I don't want to have any more near me. I want to store it remotely. But then at some point in the future, they can either say, all right, Andy, sell some of it, send me a check. Or they can say, hey, Andy, I've changed my mind. I actually want that stuff near me. They can get that physical delivered to them, right? It's not the cheapest process. You shouldn't necessarily be storing remotely with the intent that you're eventually going to get delivered it, but they have the option if so they choose at some point, correct?
Yeah, they do 100%. They can go and retrieve it if they desire as well. So yes, that is absolutely the case. And by the way, if someone is sitting on 10,000 ounces of silver and 500 ounces of gold, and they're like, I'm losing sleep over this, and they didn't even buy it from us, we have all the sophisticated machinery to make sure that what they're sending in is what they're sending in. We have great intake programs where everything is, or policies where everything is under digital camera and filmed and et cetera, so that they can send metal in that they've already accumulated and have it stored as well. It doesn't need to be purchased from us in order to be eligible to be stored.
Okay, great. All right, well, look, we'll start wrapping up here. I do have one question I want to ask you about the price of silver. Real quick, I just want to give a nod to Jason Cousins, who really was sort of instrumental in putting us together. He's the CEO of Glint. And Glint is kind of an interesting solution. I'll have Jason on at some point to really explain it to everybody here in the audience. But essentially, it allows you to spend your gold. And I guess what I mean by that is you can convert, think of it like a bank account that's very fungible, where you can decide at any time how much your bank account you want to hold in dollars and how much you want to own in grams of gold, right? And at any point in time, you can say, if I'm going to buy something, I want to buy it with my dollars, or I want to liquidate some of those grams of gold and buy it with a gram of gold. Why would you do that? Well, if the gold price keeps increasing, it's like the dollars in your bank getting more and more valuable as time goes on, right? It's everybody's dream. It's the reverse of inflation, right? So it's interesting in that it's in some ways a cheap way to have gold storage. Now you can't get the benefits like Andy said, where it's delivered to you and all that stuff. It's not necessarily held specifically in your name, but you, since Glint is holding it for you, it is a way to have sort of remote storage. And then the last point is, Bitcoin holders like to say, well, look, you can't, it's hard to get all your gold across a border, right? If you've decided that you want to leave one country and get to another, hard to do that with gold, right? Hard to have it in your pockets and make it through the security guards. But Bitcoin, you just have to remember your password, and once you cross the border, you can still spend your Bitcoin, right? Somewhat similar like that with Glint, actually. If you're, it's like a credit card, so you can use it here in the U.S., or if you cross the border, you can use it there too. But you're using the same grams of gold. Again, we'll have Jason on to explain that in real detail at some point in time. But I wanted to give him the nod and thank him for the intro. But also, you are, I think, Glint's only U.S. agent, correct?
Yeah, we are, and Jason's a fantastic guy. His program's amazing. His technology is first class. His team is exceptional, and you nailed it. They also did just introduce silver on the platform as well. You can do monthly accumulation programs. You don't want to leave more money in the bank than you otherwise would. It's a good way to hold it in physical gold, held in a vault in Zurich, soon to be in Salt Lake City as well. We did just open up a Brinks facility in Zurich as well in order to help clients, whether they want it there or here in the States, if they ever want to redeem their glint metal for physical, we can help people do that. But yes, I can't speak highly enough of Jason, his team, and his technology and his program. It's wonderful. And we're honored to work with Glint, and certainly very thankful that he helped facilitate this relationship. But he's first class guy, and so is his program.
Good. And speaking of his program, you and he have a podcast that you guys do periodically, and that's a great program for folks to listen to. So, folks, I recommend you
Called the
check it out.
Resilient Compass. I appreciate that.
The Resilient Compass. Okay.
Yes.
All right. So, last question about price of silver, then I'll let you go, Andy. So, you were just saying, hey, we're seeing all these warning signs of silver supply really beginning to get super tight here. And yeah, the price of silver has done okay of late, but it's still, in terms of the silver to gold ratio, it's still much more towards its lower extremes. How come the price of silver hasn't really taken off yet? And do you expect that to be one of the developments of 2025, that the silver to gold ratio will normalize?
I'm going to show you something. You told me I could share my screen with you, but let me pull it up first. I can answer that question, I think, in 3 slides. So let me do it this way. Share my screen with you just a second, because I think what's happening with silver, I look at silver, Adam, as the most undervalued asset on the planet. So I'm going to share my screen with you and show you something. This is a presentation that I have. Can you see that?
Yep.
Okay. So what this is here, you can Google this right here, S.2768. That was October 14th, 1942, a long time ago, right? But look what it says right here. The present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces a year. That's 1942. Now, I gave a speech in Vancouver 3 years ago, before I show you the other 2 slides here. 3 years ago, where I said there's 500 ounces of silver in the top of a Tomahawk cruise missile. And at the end of my speech, a man comes up to me and says, I work for the DOD. I actually helped design the Tomahawk. He says, I think there's silver in it, but I'm not sure how much. I'll get back to you. Never hear from him again. I go back last year. This was 2 years ago. There he is. He says, you were right. I'll be damned. There's between 13 and 14 kilograms in the cone of a Tomahawk. That's 500 ounces. And he showed me all sorts of pictures and this and that. And he says, you know, I think there is in all of these high-tech weapons. We'll think of aerospace, think of all of the uh, high-tech weapons that the United States and the military industrial complex has been making and selling all around the world, fostering and funding and uh, providing weapons to all these wars. And so they always used to report silver in the supply demand numbers. Here's last year's supply demand numbers. I'm going to make this a little bigger. Okay. We had a 240 million ounce shortfall last year. The year before, right here, 265 million. But let's look at the demand here. Industrial, 9%. Electrical and electronics, 9. Photovoltaics, that's solar panels, 20. Brazing, alloy and solders, other industrial, photography, jewelry, silverware. Where's military? Where is it? Now, this is the picture of the COMEX market. Okay. Look at this. This is the green line or the red line are the four big commercial banks that have short positions. And I'm not, it's probably Citibank, Bank of America, JP, and Goldman. I don't know exactly who they are at the moment, but this is what the green lines are the red line. The green line are the largest 8 commercial banks, largest 8 traders on COMEX. So here's the bottom line. This right here represents 8 Western banks that hold the largest concentrated short position of any commodity traded on COMEX. Look at oil right way down here,
Wow.
right there. Silver, platinum, gold, palladium. But this is the largest concentrated short position. Now, the question is why? Now, here, remember what I said to you about the banks that are sophisticated, motivated, coordinated? Here's silver in the LBMA. You notice something? What they've been doing? They've been draining the world's exchanges because they know that the Western military industrial complex, in my mind, has been suppressing the price of silver to make high-tech weapons. And if the price of silver went parabolic, it would be a problem. So they make it think that it is just an archaic relic from years gone by, and there's no reason to own it. But then I'll ask you, why are there the 8 Western banks suppressing the price of silver more than anything else? Why? What is the reason? Maybe it has something to do with this, or maybe it has something to do with this. So my point I'll stop sharing is simply this, that silver is the most manipulated commodity on the planet. And remember in the LBMA, they're trading every single day 3.5 times global annual mine supply, of which 90+% of those contracts are paper until there's a problem. And that problem is, oh my goodness, the exchanges are being drained. And the all-time biggest monthly delivery or exodus out of the LBMA, 70 million ounces was drained, or 20% of that float was drained in January. And then we see another 8 million ounces come out last month. So they're slowly draining the exchanges because I think these countries, India has imported over 800 million ounces in the last 4.5 years. That's more than is on COMEX and the LBMA combined. And I think they realize that silver is far more than industrial. It's strategic. And when you have the ability to suppress the price, create an illusion using futures contracts, well, that works until the world says, we're going to stand for delivery. This is the existential threat. This is the setup. This is the squeeze that is potentially happening. Now, guys like me have been screaming this for a long time. You can't run from mathematics. This is coming down to mathematics. I guess I'd say it this way. The only way to successfully manipulate a market, Adam, over a long period of time is to push it in the direction that's going. And for a long period of time, no one wanted anything but Western securities and treasuries and didn't think about draining the LBMA or the COMEX or challenging it. Now, as I mentioned, these countries of China, Russia, Saudi Arabia, India, they're wealthy, coordinated, sophisticated, and motivated. And they are using this suppression that we've put on for far too long, like a jujitsu move, using your opponent's leverage against them. That's what is happening. And I really do believe Trump realizes this. And this is why he came in and said, we're going to tariff all of this stuff, do the exchange for physical, the Western, they're all saying, hey, we got to get the metal back here because we're naked, exposed on COMEX. Let's do an EFP. And then it starts to accelerate. And I think London said, wait wait a second, this might be bigger than we're being led to believe. I think it's bigger than we're all led to be believed. And my guess is that there's something in store big for gold and silver. Zoltan Pozsar, one of the smartest men I've ever met, said, we're in Bretton Woods 3. Well, Bretton Woods 1 after World War II when we took over for the pound sterling. Bretton Woods 2, loosely, when we signed the petro deal in 73 with the Saudis. Bretton Woods 3, a system he says is all about transparency in commodities, a la blockchain and physical commodities like gold. So what did Elon say? Let's put everything on a blockchain, the assets, the liabilities, the gold. What did Judy Shelton say? 50-year treasuries. And then she said, I want to see stable coins pegged off of them. All of this stuff on a blockchain. Where is gold held? In the gold revaluation account. Everyone's screaming, let's revalue gold that's marked at 42.22 an ounce. Revalue it, peg it to a level to back your 50-year treasuries, which are redeemable on a blockchain, transparency, and commodities. And it's not just gold that's coming back. It's silver, it's other commodities, other strategic things. So yeah, I think this is a time for people to, I think, realize that we're on the heels, it seems, of some monetary change where gold and silver will be added into the system along with digital technology to inspire confidence and trustworthiness in a system that's lost it, whether it be through inflation or weaponization of the treasury market or just the way we've conducted ourselves with the world reserve currency. Remember, a trillion seconds ago was 31,688 years ago. And for the past several years, we've been accumulating $1 trillion worth of debt every month or every 100 days. That's about $100,000 a second. At some point, the rest of the world says, I'm not going to pull my oil out of the ground and employ all that work and effort to give it to you when you can press a button like you did a few years ago, create trillions of dollars out of thin air and buy U.S. treasuries or print U.S. treasuries. So that's not a fair deal. And then we're going to go a different direction. We'd like gold, please, which is proof of work. So I just think, Adam, I think we're heading in a different direction that people need to have an open mind about, because the biggest money in the world, who is also the most well-informed, is showing us that gold and silver mean a lot more than the Western media is letting on all of us to believe. So yeah, I'd go on record and say this is going to be something interesting as we continue to see what Trump has in store for us.
Okay, so lots of reasons to own these things in general. There's the optionality of this massive repricing event if things lead up to the crescendo that you think they will. I guess I would say, folks, don't buy the gold expecting that that's going to happen tomorrow. It may not happen, it may happen, but it may not happen for years, right? But there's lots of other, very good reasons to be doing this. But I think, Andy, you would say, look, you think the probability of it happening is high enough that you would want to get in on it now, so that if there is a repricing, you benefit from it. You don't wake up one morning, hear about it, and it's too late to participate in it.
100%. And this has happened before. Over my shoulder is Roosevelt. And when he confiscated gold, it was $20 an ounce. He paid everyone $20.67. And with a nickel being worth a dozen eggs, 67 cents was a lot of money. So then he revalued or devalued the dollar by 40% and revalued gold to $35 per ounce. And so this has happened before. It's not really crazy to think that it could happen. And when you have crossed a debt Rubicon the way that we have, you have to start thinking outside the box. So yeah, I do think these kind of things. But look, I've been buying it, like I said, every 2 weeks for 35 years, and my entire career, I never talked about buying gold because of these crazy things happening. Because to me, it's just been wealth. And all of a sudden, the world's getting a little crazier. And I think there are reasons to own it along those lines as well. But owning dollars, which are, I said to Judy, who decided on 2% inflation? This is stupid. And I'll let, people can watch that if they want and see what she had to say. But even 2% inflation, which we're nowhere near, in 10 years, you've lost 20%.
Right.
And so
she credited to Janet Yellen, by the way, just as an FYI.
Yes, that's right. She said it was Janet Yellen and her husband. And so, in a currency that is inherently meant to lose value and devalue, why not buy something like gold that has shown to appreciate since 2000 by 9.9% per year? It was $250 an ounce in 2001. And here we are now at 2,900 and change. So quietly, it's the tortoise, not the hare. You don't buy it to get wealthy. You buy it because it is wealth and has been. I don't know how many hundreds of times it was mentioned in the Bible 6,000 years ago. So yeah, that's why I own it. And we'll show you how to own it in a very conservative way. And I can't say enough what an honor it is to be given an endorsement by you. We take that as serious as a heart attack, and all my brokers do. And we do all we can to make sure it's a good experience for your listeners. And I'll make darn sure that they won't be the first customer complaint we've ever had in 35 years. And show them how to do it in a conservative, liquid manner that addresses their concerns and their needs.
All right. Well, great. Well, thanks, Andy. Hopefully we take it as serious as let's say a marriage, getting married versus a heart attack, just to have something positive to associate with it. But I very much appreciate
Well, yeah,
the
that's
level
true
of
too.
commitment.
For lack of a
Um,
better adjective, it's something that we take very, very, very seriously and are very, very appreciative of, and we'll make it a good experience.
all right.
And I'll
Well,
tell you, for people who need to speak to me as well, they can just send an email at info@milesfranklin and say Adam Taggart sent us. And if a question is directly for me and it's important, they need to speak with Andy, and we will make that happen.
awesome. Thank you. And that's what I was just about to ask you. So, yeah, folks, go to send an email to info@milesfranklin. They do have a website. You can check out their website if you want to get details there. But going back to the sort of personalized touch, white glove experience, the best way to do that is to send an email to that email address. And yes, if you can, when you're talking with them, please mention that you heard about them on Thoughtful Money. There is an affiliate program, so that will help fund this channel. You will not be paying any more than if you had walked in through the front door there at Miles Franklin. Andy's just selling part of his firm's commission with us. But it's a nice way to do something that's in your financial self-interest, but hopefully will help also support this channel.
Exactly
All
right.
right, Andy, it's been wonderful. Really look forward to having you back on the program again on a regular basis going forward, because I
I'd love that.
sense
And
there's
I
going to
promise not to be so long-winded next time. Just kind of trying to lay the foundation.
no, this is perfect. This is perfect. We're getting that foundation built. We're going to build on it in your future appearances here. And it seems like the world is going to give us continued developments to talk to you about this, which is going to be exciting. As we wrap up here, any parting bits of advice for the folks here?
No, I think we certainly covered it. To me, the bottom line is just remember, pay yourself first, gold and silver are wealth, and trust your gut. These are very, very, very fluid, unusual, changing times. And uh, I just think that gold and silver need to be looked at not as something as a barbarous relic, but as wealth that should be a part of everyone's portfolio, regardless of your risk tolerance or where you are. It's eternal, and there's nothing better that you can pass on to family members that has both intrinsic and sentimental value and privacy in a world that is becoming digital and borderline surveillance state. Having something off the grid in a very legal, private, safe, liquid fashion is great. And there aren't very many things you can say that about anymore. Maybe that's why all the central banks are repatriating their gold. Give it back, please. Send it home. We don't want to leave it there anymore. We like you, thank you, but we'd rather have it in our own possession. And I think there's something to be said for that. These people are ahead of the curve always. So I guess we'll see. As the Chinese curse says, may you live in interesting times. These are. And I think it's just a little bit safer, a little bit more liquid, having some wealth in your own possession, outside the grid, if you will.
All right. Well said. Well, Andy, thanks so much for coming on. Thanks for being so detailed in this discussion. Thanks for the new partnership, and really look forward to having you back on and continuing this discussion for many, many months to come.
Likewise,
Thanks so
best
much,
of
my
luck
friend.
in your conference. Hope to see you at the next one, and I definitely look forward to picking up where we left off here again real soon.
Thanks so much.
Thanks.
Everybody else, thanks so much for watching.